The 5 most insane financial disasters in history. Everyone knows about the Great Depression and its impacts, but what about some of the other insane financial disasters of our time? In just 1 week, the 2008 financial crash wiped out over $10 trillion in global market value. That's more than the GDP of most countries. But believe it or not, that's not even the most shocking financial disaster in history. Throughout history, greed, mismanagement, panic, and even pure delusion have triggered some of the most catastrophic financial meltdowns ever recorded. These weren't just bad investments, they were events that shook entire economies, ruined lives, and redefined how money is managed worldwide. Understanding these disasters isn't just about looking back. It's about learning the warning signs, avoiding the traps, and seeing how even the smartest people can get caught in a financial whirlwind. So today, we're diving into 5 of the most insane financial disasters in history, from bursting bubbles to billion-dollar collapses, and the lessons they left behind. What causes financial disasters on such a massive scale? Often, it's a combination of factors. Overconfidence in booming markets, lack of regulation or oversight, widespread speculation and herd mentality, poor risk management, and sometimes outright fraud. But what makes them truly disastrous is the domino effect. A crisis in one corner of the economy can trigger global fallout, affecting millions who never even saw it coming. Now let's break down 5 infamous financial disasters, each one more unbelievable than the last. 1. The Tulip Mania, 1637. The original bubble. In the 1600s, tulips were the hottest commodity in the Dutch Republic. Prices soared, with some bulbs selling for more than a skilled craftsman's yearly salary. At its peak, a single tulip bulb could buy you a house. Then, the market collapsed overnight. Tulips became worthless. Fortunes were lost. It was the world's first speculative bubble, and a warning about irrational market hype. 2. The South Sea Bubble, 1720. The first corporate con. The South Sea Company promised investors untold riches from trade with South America. Politicians and aristocrats jumped on board. The company's stock skyrocketed without profits, and when reality hit, the bubble burst. The British economy crumbled, and major figures, including the Chancellor of the Exchequer, were ruined. It's a cautionary tale of hype over fundamentals. 3. Black Monday, 1987. The one-day crash. On October 19, 1987, global markets crashed. The Dow Jones dropped 22.6% in a single day, still the largest one-day percentage drop in U.S. history. Triggered by program trading and panic, the crash caused fear worldwide. But thanks to quick action by the Fed, a larger meltdown was avoided. It reminded the world that computers and markets don't always mix well. 4. The 1997 Asian financial crisis, the domino effect. It started in Thailand. A currency collapse spread across Southeast Asia, sinking economies in Indonesia, South Korea, Malaysia, and more. Banks failed. Inflation soared. Unemployment spiked. Billions in IMF bailouts were issued. It exposed how fragile emerging economies can be when tied to foreign investment and over-leveraged currencies. 5. The 2008 global financial crisis. The big one. It began with subprime mortgages, bundled into securities by major banks. When homeowners defaulted, the whole system unraveled. Lehman Brothers collapsed. Banks failed. Governments spent trillions to stop a total collapse. Millions lost homes, jobs, and savings. To this day, we're still seeing the effects in the form of regulations like Dodd-Frank and debates about too big to fail. The collapse of Lehman Brothers on September 15, 2008 was the moment the world held its breath. A 158-year-old firm, one of the largest in the U.S., went bankrupt, unleashing panic across global markets. Within hours, markets crashed. People rushed to ATMs. Governments scrambled. It was a terrifying reminder that no institution is immune, and when confidence dies, so does stability. From tulip bulbs to trillion-dollar bailouts, financial disasters show us how fragile and emotional the economy really is. They're not just about numbers, they're about human behavior, greed, fear, and belief. Each of these 5 events reshaped the world in its own way, and left scars still visible in our financial systems today. The lesson: pay attention, diversify, question the hype. And remember, what goes up too fast can come crashing down. Which of these financial disasters shocked you the most? Or do you think we're on the edge of the next one? Drop your thoughts in the comments below and check out our next video. Don't forget to like, subscribe, and stay informed.